happening, people? I'm just going to give you a quick rundown on how the market works and a little explanation as to why I don't really like to trade standard support and resistance. So looking at Aussie dollar, US dollar here, and as you can see, I don't have no indicators on my chart. I don't have no Fibonacci's, no Jan fans, no Jan box, or nothing like that. I don't use none of these pattern tools or nothing like that. So I'm just gonna explain to you, for me, how the market works, and maybe you can implement it into your trading. But yeah, I don't like support and resistance personally, but I would say that probably 90% of traders use standard support and resistance as a main factor in their entry. So as you can see, there was a massive sell-off on Aussie dollar, US dollar, and then you can see that it put in a new structure high here, and then it all changed. So it couldn't create a lower low, and it created a higher low, and then it created a higher high here. Now, for me, this was a strong move from here to here. From the bottom to here was a strong move, and then once we got this move here is when I started becoming interested in buying Aussie dollar, US dollar, because we had an impulsive move up. So a lot of the bankers and the big boys were buying the Aussie dollar, US dollar, and then once the price got to here, the bankers and the big boys were either taking their profits off the table, and then once the slowdown in momentum, all the retail traders started trying to push the price lower and thought that they could push price back down to these lows down here, but it didn't work, and the bankers were having none of it. So once the correction was over and the big boys were ready to go again, you got another big strong move up, and then you got another retail traders and small traders. So this is why I don't like support and resistance. So some people will swear by their things that price would have to come down and enter this box or touch this wick or whatever it may be. But so some people wouldn't have took a trade from here, but again, once we had this impulsive move up and we started moving sideways, I was interested. And once we have a 1 touch, 2 touch, and the 3rd touch is broken, and the structure floor can't be tested again or can't be broken. So if this low can't be broken, or it puts in a double bottom and then we break, then I'm really interested. So another long position from here, you would have had your stops below the lows, and then once a new higher high was created, then once this high is broken, then you can adjust your stop. I would start adjusting your stop loss to either your entry or just put it in a little bit of profit. But then again, corrective movement, retail traders trying to push the price lower, can't do it, and then again, big impulsive move up, and then more sideways downward movement, impulse, and then more sideways movement, and then now we're currently here. But this Aussie dollar US dollar, I believe, is approaching this resistance here, and for me, it's the way it's approaching it. Its momentum to the upside is starting to slow. So it'll be interesting whether there's a deeper pullback on this, whether we start to get some sort of movement like this, before another push to the upside, or we could just see price literally do something like this. We could just see price do something like that, and then put in a corrective pattern like this. Let's drag you over here. Could put in a corrective pattern like this before price decides to move lower. We just don't know. We'll have to see what happens in the market. But for now, I would still be bullish bias. I would just wait to see if there's a bigger correction. Maybe on the daily time frame, might have a deeper correction, and then it might move higher. Be interesting to see how this one plays out. But this concept works on every pair, every time frame. So again, to the eye, this would be an uptrending market, albeit a slow one, and then you might wonder why, and then you go back to the daily, and then you see this big sell-off on the CAD. I would imagine partly most of this was to do with oil, the big sell-off in oil prices. Again, this is an interesting one because it seems like we're impulsing out of this corrective channel now to the upside, so it'll be interesting to see whether we get some sort of price action like this where it corrects and then moves higher, or whether it just snaps back inside and it was a false breakout, get some more corrective moves, and then push to the downside. If we come back inside on Monday, then I'd be looking at this as a false breakout, and then I would definitely still be looking for opportunities to the downside. But again, it all depends on what happens on Monday, so keep our eyes on that one. Another pair where we can explain. So okay, right, so let's just use this might be a good example. So here's your standard support and resistance. Let's just use this zone. So this would have been a great trade. This is why I have no quarries with trading support and resistance. So it's sort of ranging, and then it breaks this high, comes back, retests, and goes long. Would have been a brilliant trade. Got loads out of it. But then we look at this ain't really a great example because it does kind of touch and then it goes again. But so here, yeah, it does, but it don't. So again, it all depends on the trader. But again, we have like a weak movement to the downside, and then a big push, and then we go. So again, it all depends on the trader. But for me, I would have been in this. I didn't take this trade personally, but I would have been in due to the fact that it's just literally corrective movement. It's slow move to the downside, and then we had the big impulse up. But again, it is all based on what the trader believes and their beliefs and what they've done in their back testing and all that kind of stuff. But I just think you can get much more out of trades if you don't purely rely on support and resistance. You can implement, I think you should implement it into your trading alongside this. But this is a great way to just look at the market and see for yourself when the big boys are playing and when the not so big boys are playing. Again, similar price action to the Aussie dollar, US dollar that we covered, but again, like, you can see the big boys playing. Then you see the smaller boys, the big boys, smaller boys, and it just carries on in that sense. So a lot of people, a lot of support and resistance traders, they'll trade the ranges when markets are moving sideways. But for me, when markets are moving sideways, that's when I'm looking to get on the bigger move up or down. So look, this is a great example. So strong move to the downside, and then you have this weak pullback. Structures are failing to get broken, and then you have a big move to the downside. And the market just works like this on a constant basis, constant basis. So again, a strong move down, move sideways, and then it moves lower. Again, if you'd like me to cover any pairs or anything you want me to cover, just leave me a comment or whatever it may be, a message, and in my next video I'll do my best to do some analysis on it and what I'd be looking for on that pair, or whether it be gold or silver or oil or whatever. I won't mind going over it and giving you my insight to what I believe is going to happen. So yeah, again, thanks for watching. Hope you enjoyed it. Give me a like, subscribe, all that good stuff, and I shall see you in the next video. Thank you.